HARPTA applies differently to commercial properties. Depreciation recapture is massive, and buyers expect different closing terms. Here is your commercial tax guide. Hi everyone, I am Jason Wong, Principal Broker and founder of Island Dragonfly. If you are a foreign seller looking to offload a commercial building in Hawaii, I have some news for you. If you think selling an office building is like selling a condo to a nice couple named Barb and Dave, you are in for a rude awakening. When it comes to the IRS and the state of Hawaii, commercial real estate is a totally different beast. Let's talk about the first hurdle, withholding. You probably know about FIRPTA and HARPTA, that is the federal and state tax withholding laws. For residential sales, there are loopholes. If the buyer is going to live there and the price is under $300,000, sometimes you pay zero withholding. But for commercial property, nobody is living in your warehouse. There is no personal residence exemption here. That means you are almost guaranteed to see a 22.25% chunk of your sales price withheld at closing. Notice I said sales price, not profit. That is 15% to the feds and 7.25% to Hawaii. Kiss that cash goodbye temporarily until you file your tax returns. Now here is the silent killer, depreciation recapture. For years, you have been smart. You have been writing off the value of your building to lower your taxes. You thought that was free money, right? Wrong. Uncle Sam has a memory like an elephant. When you sell a commercial property, the IRS looks at all that depreciation you claimed and says, "We would like that back, please." This is called Section 1250 Depreciation Recapture. It is taxed at 25%. That is usually higher than your standard capital gains rate. So, if you have owned this building for 20 years and depreciated it down to zero, you could be looking at a massive tax bill that you did not budget for. Finally, let's talk about the closing timeline. Commercial buyers are not just checking for termites. They need time for Phase 1 environmental studies. They need tenant estoppels to verify leases. They need to review service contracts. A residential deal might close in 45 days. A commercial deal involving foreign sellers and complex due diligence, you are likely looking at 60 to 90 days minimum. Do not let these taxes scare you out of a great profit. You just need the right strategy and a broker who knows the difference between a house and a high-rise. I am Jason Wong. Let's get your deal done right.